Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is February 22nd, 2016. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. US market had a follow-through day last week. It is now back to the uptrend. Some stocks are breaking out. However, the large cap stocks like Facebook, Google, they're still not in the buy point. My action, I started long some of the stocks and ETFs. Let's take a look at the indices and their charts. First is the German DAX index. As you can see, this index has closed above 30-day moving average. It has potential to go up to 50-day moving average. Although the overall trend is still downtrend, but it has a potential to reverse that trend right now. So we just have to wait and see. A NASDAQ monthly chart. NASDAQ, as you can see here, is still below the annual moving average. However, it has this kind of candlestick pattern, and means it closed high last month. So let's take a look at the weekly chart. It undercut previous low, and now it's close to the 10-week moving average, which is 50-day moving average. And you can see here NASDAQ daily chart. Last week I had a follow-through day, which is this day. Market is a Wednesday last week. Market had a run up with a high volume, higher than previous day. So that's a follow-through day by Investment Business Daily. There are about 60% of follow-through day can lead to new market trend. However, every market trend will start with a follow-through day. So it's a probability. Whether this follow-through day works or not, there's a 60% of chance it will work. Mid cap has already break out from this double bottom pattern. Small cap monthly chart. Small cap is the weakest. Small cap weekly chart and is still at a low level. Small cap daily chart is forming this this double bottom W pattern, but whether it can successfully break out or not, it's remain to be seen. SP 500 large cap, this is a monthly chart below annual moving average. SP 500 weekly chart, it try to find support in this area. Now take a look at the SP 500 daily chart. It looks like it's about to break out from this double bottom. If we have one more up day, it can break up the breakout from the double bottom and at the same time break out from the go above 50-day moving average. That may lead to another round of uptrend until it hits 200-day moving average. It may have a resistance like this one. So we're in the short-term market rebound phase. Whether this short-term rebound can lead to the long-term uptrend or not, it remains to be seen. Let's just play. I will play the short-term first, and to see if this can continue go up, or it may. Another possibility is it may hit 200-day moving average and come down again. So we have to keep that in mind. Gold. This is a monthly chart. Gold has a very good chance to turn into the uptrend. Gold weekly chart. As you can see, it's already surpassed this high. It may pull back a little bit and go back up. If it can go above this high, surpass this high 1300, that would be very good. Gold daily chart, it has a very sharp run up, and that's an indication that there's some money is buying this. Silver, daily chart. Also above 50-day moving average, above 200-day moving average. So good sign. Gold mining stock, and every time it pull back, it ran back up. So in a short-term uptrend as well. US dollar come down, and last week has a little bit of rebound, but overall the trend has broke to the downside. Crude oil trying to find support in this area. If the crude oil can stay above 50-day moving average, that would be a good sign for the crude oil to reverse to the upside. But for now, crude oil is in the downtrend, still in the downtrend. Energy stock ETF. Energy had a double, this is a double bottom. This is very much like a double bottom and above 50-day moving average. So energy sector stocks become interesting. Shanghai Exchange Index monthly chart. Shanghai China market is in a downtrend, but it is having a short-term rebound. Shanghai market weekly chart, it undercut previous low made in last August. Shanghai Exchange daily chart. As you can see, undercut previous low is rebounding. If it rebound to 50-day moving average, like a 3100, that can be a resistance. FXI is an American ADR for the Chinese big companies, downtrend. But short term is all doing the rebounding. Biotech ETF and downtrend. Real estate ETF rebound pretty sharp, but overall trend is still down. Airline stock, this is becoming interesting. Airline has made this little base has broken out, so right now it's above 50-day moving average. Airline stock may go up. Copper is rebounding. Hey, this is interesting. If the copper can go above 24, this ETF GJC can go above 25. Now we may see a trend reversal of copper. That's indication the commodity may be reversed. So we have to watch that. Commodity has been in a downtrend for a very long time. So if this commodity reverse, that will bear some something will be interesting to watch in the market. Bond price uptrend and pull back a little bit near term. Semiconductor ETF also forming a double bottom pattern right here. Social media ETF had a very sharp rebound last week. Overall trend is still down. If this rebound can carry this ETF above $18, that would be, if it can break above 18.62, which is previous high over here, that would be a double bottom. Solar ETF downtrend. XLF financial ETF is still in a downtrend. Again, if it can go above 2174 for the XLF, financial sector may also complete the double bottom. So we just don't know. This is a short-term rebound. This rebound is in the middle of a downtrend. We don't know if this can turn into uptrend or not until it actually turns. Then we will know for sure. Utility ETF monthly chart. As you can see, utility has been a very nice long-term uptrend. Right now, it's in correction. Looks like it may finish this correction. Utility ETF weekly chart. You can see this is going the base, and if it can, this is a many month of the base. If it finish this correction, keep going up, then it's another uptrend. Utility ETF daily chart. This is pretty nice. It has a little nice uptrend here. So utility ETF may be buyable. If you buy right now, you may want to put a stop order at $45.90, somewhere below $45. That would be the stop. Because if it failed this, it go back down again, then this trend, this expectation of the uptrend will be has to be given up. So, but if it doesn't, it keep going up, then you can just move up the stock. That would be the trading strategy. That's the indices. Let's take a look at the IBD leaderboard stocks. Those are few stocks. Actually, utility ETF is on the IBD leaderboard. Okay, let's take a look at the stocks. First is the AT&T. It finished a cup pattern and the breakout at $36.55. That's a breakout pivotal point. 5% above that pivotal point is a 38.38. So you can still buy as long as it's below 38.38. That's AT&T. Let's take a look at the next one is ELLI. Ali May. And IBD will list, the leaderboard will list all the fundamental indicators on the left hand side, and then they have annotation for the chart. And this, I don't understand why they don't have annotation. This is one of their leaderboard. Anyhow, the fundamental indication is pretty good for this stock. It's a growth stock. Earning growth is very good, and the chart is actually broke out on several buy point. This is a one, and then this is another one. So right now it's still in the buy range. Let's take a look at next one. Impact is also breakout from this buy point, $26 buy point. 5%, the buy range can go all the way up to $27.30. The so-called buy range is 5% of the breakout pivotal. So as long as it break out within 5% of the run up, you can still buy it. If it run up more than 5%, that will be too late. Again, this is it's an outsourcing computer service outsourcing company. It's not computer service. I'm sorry. It's commercial service. Anyhow, obviously their server is quite slow. MSCI, that's another stock on the IBD leaderboard. Breakout pivotal is $73.54. It has not breaked out yet, but it's very close to the breakout point. Financial service stock, and a lot of green light here. Of course, some of them are not ideal. So now the stocks is all green light. There's always something not quite ideal. So you just have to look more into it and decide on your own whether you want to buy a growth stock like that or not. Okay, another one's RAI. Reynolds American, RAI, and it broke out, then pull back. Now it's re-break out again, and it's within the buy range. Okay, and another one, a lot of us are familiar with this. This is a clothing store, Ross, Dress for Less, or Ross store. They sell clothes, and looks like their growth is very good. And this is a cup with a handle, and break out, pull back, and re-break out again. So that would be all for the IBD leaderboard. And there are not many. The previous high stock companies like Facebook, Google, they're not in the buy point yet. They're not breaking out yet, so they're still making their new base. And for now, what to do now? For now, since the market phase is in a confirmed rally phase, so we may long stocks as they break out. We may long ETFs. However, keep in mind, follow through only 60% lead to the uptrend. Another 40% actually fell. So we have to prepare to get out if this short-term uptrend does not work out. And that will be all for today. See you next week.